When you apply for financial aid for college, the government wants to understand your family's financial situation. This includes your income and your assets. Assets are things your family owns that have value. They can be things like savings accounts and investments. The value of your assets can affect how much financial aid you receive. The free application for federal student aid, or FAFSA, is used to apply for financial aid. The FAFSA asks about your family's assets. The government uses this information to calculate your expected family contribution, or student aid index. Your student aid index is a calculation that determines the amount your family is expected to contribute towards your college costs. The lower your student aid index, the more financial aid you are eligible to receive. So understanding how assets are factored into your FAFSA is crucial. It can help you maximize your chances of getting financial aid. Knowing what assets are considered on the FAFSA can help you plan for college financially. It can also prevent surprises when you receive your financial aid package. Understanding the role of assets in the FAFSA process can make a significant difference in your college affordability. Not everything your family owns is considered an asset on the FAFSA. The FAFSA focuses on assets that are easily convertible to cash. These are assets that you can quickly access and use to pay for college. For example, your family's primary residence is not considered an asset on the FAFSA. This is because you are not expected to sell your home to pay for college. However, a rental property your family owns would be considered an asset. This is because a rental property is considered an investment. Understanding the difference between assets that are counted and those that are not is important when filling out the FAFSA. It ensures that you are providing accurate information. It also helps you understand how your family's financial situation will be assessed. The FAFSA requires you to report certain assets. These typically include cash on hand, checking and savings accounts, and money market accounts. You must also report investments like stocks, bonds, and mutual funds. Real estate other than your primary residence is also reportable. Remember, accurate reporting is crucial when filling out the FAFSA. It's always best to consult the official FAFSA website or a financial advisor if you have questions about what needs to be reported. Assets you don't have to report. There are some assets that you don't need to report on the FAFSA. These are typically assets that are not easily converted to cash or are not considered readily available to pay for college. As mentioned before, your primary residence is not considered an asset on the FAFSA. Personal belongings like cars, furniture, and clothing are also excluded. While these assets don't directly impact your FAFSA, it's important to remember that other financial aid applications might have different requirements. Always check the specific instructions for each application. Looking beyond the FAFSA. While the FAFSA is a significant factor in determining federal student aid, it's not the only factor. Some colleges and universities use additional financial aid applications, such as the CSS profile, which may have different asset reporting requirements. These applications often delve deeper into a family's financial situation. For example, the CSS profile might inquire about the value of your family's retirement accounts, such as 401ks and IRAs. While these assets are not reported on the FAFSA, they could be considered by some schools when awarding institutional financial aid. It's also important to remember that even assets not reported on the FAFSA or CSS profile can indirectly influence financial aid. For instance, a high-value asset, even if not reported, could generate significant income that would then be factored into your financial aid eligibility. Families sometimes consider strategies to reduce the impact of assets on financial aid eligibility. This might include transferring assets to a grandparent or other trusted individual. However, it's crucial to note that such strategies can have complex tax implications and may even be considered fraudulent if done solely to manipulate financial aid eligibility. Therefore, it's essential to seek advice from a college financial aid counselor, from college planning professionals, before making any significant financial decisions related to college planning. They can provide personalized guidance based on your family's circumstances and ensure you comply with all applicable rules and regulations. Always remember, completing the FAFSA is the most crucial step in the financial aid process, regardless of your family's asset situation. It ensures you don't miss out on any potential financial aid opportunities.